1.5%. I'm bringing Kevin Green, markets correspondent. He's watching all the levels really closely. A lot of conversations over the weekend and market jitters after not only the sell-off, but also really just the fact that the economic news started to seem a little weaker. So people started to get nervous. What are you watching now? Because even the VIX is pulling back 2.5%. Different story today.
Yeah, I think we had a perfect storm on Friday, Nicole. Obviously, as you kind of talked about, the economic data kind of showed a stagflationary environment. And this is something we saw this time last year. And then we also had options expiration, which also creates a little bit of volatility. And before, in the market open yesterday or on Friday, we kind of talked about that the VIX was actually showing a lot of complacency. And now we saw actually a little bit of a re-rating for that. Now, when you're looking at the longer term chart here, what do we want to really see? We want to see a bounce off that 50-day moving average, or at least defending it. And that's what we're doing right now, with the S&P up around 0.4% at this point in time. Now, there will be a quick area of resistance, potentially sitting at around 60-40-ish, and that's because we have this downtrending line that we had in the past that acted as an area of resistance. We failed that as an area of support on Friday. Today, is it going to act as another area of resistance? And then do we fail a little lower, or do we kind of have this pin action or very consolidated range for today? I think that's the first question. But if we were able to break up and break out, what would be very successful for the bulls today is trying to recapture that 60-70 level on the S&P 500. That would basically have us clear the 20-period moving average and continues to kind of hopefully try to regain some momentum back to the upside. Now, I'm still a little bit concerned when you're looking at stochastics. That just shows the momentum of price action that did have a bear cross on Friday. Let's see if that's going to resolve itself today as well. And then MACD did also cross in a bearish fashion. Now, it's not a full bull bearish signal until we get below that zero line, but two items that we definitely want to see kind of correct itself and get a little bit more bullish. We are seeing market breadth actually expanding here today. Around 65-66% of the stocks in the S&P 500 are in the green right now, and that broader participation really could lessen the blow if we do have maybe some concentration risk when it comes to mega cap tech like we saw last week.
All right. Thank you for all of that. I want to get to some of the dividend payers. I will note Western Dig, Palantir, Domino's Pizza, Moderna, some of the names that are under pressure, and you're having Nike and Norwegian Cruise Lines doing well, United, Oracle, Delta, some of the winners. You're looking at some of the dividend payers, often the family favorites, some of the high dividend stocks that you've performed well that you're watching?
Yeah, kind of like the forgotten cohort of the market. Not as sexy when you're kind of talking about some of the major advances like a Palantir, for example, here. But if you kind of looked at last week, dividend stocks, especially high yield dividend stocks, actually did outperform relative to the broader S&P 500, or even if you're looking at growth stocks. Now, this kind of signifies that we might have a little bit of a risk off tone in the market, but this outperformance actually happened even before on Friday. And so when you're looking at stocks like a Hershey, a Dow Chemical, a Verizon, all of these have very high dividends on a relative basis. There is actually flows going into them. And so this chart really just shows the relative performance of the SPY dividend ETF compared to the SPY as well as SPY growth. And if you're looking at it on a year-to-date basis, SPY dividends, or that ETF, is up around 3.4%. So it's actually outperforming the broader index, or this SPY itself, which is something to kind of note. And then below, we also have a ratio chart with the SPY dividend ETF at the top, SPY on the bottom here. And what you usually kind of see is the risk on tone is obviously going back into growth areas, maybe selling a little bit from the dividend players. And that really gives you that price momentum to the upside. But this just kind of highlights, Nicole, this was not a sell everything type of an event on Friday. There was a lot of bright spots in this market that have been kind of forgotten. And the technical setup on the weekly charts for a lot of these dividend players are starting to get fairly interesting.
And then, so thank you for that, because the dividend payers are often of great importance to our viewers and people who are holding for the long term. And then we take a look at volatility, and we don't see the VIX at 20, that's for sure. But while it's popping around, you're not seeing extreme volatility. What are you watching within volatility?
Yeah, so we're not seeing extreme volatility yet. I mean, if you're looking at a 17 VIX on a historic basis the last 20 years or so, right now we should actually see elevated vol. Now, last week, once again, we kind of talked about this before the sell-off, that we were at extreme low levels when it came to the VIX curve itself, right? The complacency in the market was definitely bid in, or wasn't bid in, and now you're starting to see actually more of a normalization in this curve. Now, that doesn't mean that we're out of the woods quite yet, but this does mean that from a structural structure standpoint, this gives you as a bull maybe some confidence that, okay, we don't have this massive re-rating that could take place. Maybe we see a gradual increase of the VIX if we do see a little bit of a sell-off and not this massive fracture yet. So I think this is actually a really decent sign to be able to say, look, we got out of very extreme levels. We were able to see that pullback. We held the 50-day moving average. Now we have a normalization of the VIX curve. Now we just need participation. And today, we don't actually have that much when it comes to economic data. It's going to be very news driven. Unfortunately, tomorrow, though, Nicole, I will put it on the radar. Consumer confidence coming from the conference board could be one that does move the markets. And we have seen those trends kind of moving to the downside, obviously, when it comes to University of Michigan. And even if you're taking the S&P global PMI data, purchasing managers seem like they're a little bit less optimistic as they were back in November and back in December. If that translates, maybe that provides a little bit more of a bearish take in the market. But for today, let's see if we're able to hold up and see a little bit more of a broadening.
All right, noted. So we'll watch for that tomorrow. I mean, last week we saw some sentiment numbers lower. We saw PMI services lower. So let's see what the rest of this week brings, and tomorrow in particular, like you're noting. Kevin Green, great to see you.